how would you categorize? Good morning. How would you categorize these earnings?
Yeah, the top line is slightly deteriorating compared to Q2. Europe is stabilizing, be it on somewhat easier comps. Some slowdown in our industrial segments in the US, but overall happy with the fact that our gross margin, so our service charge, has increased compared to last year again, third quarter in a row. We contained our cost while at the same time investing in our digital transformation, and we had a great free cash flow, actually the highest ever in our history, almost doubling compared to last year, which is good news for our shareholders, we think.
Jacques, you talked about some slowdown in industrial sectors in the US. Is that a result of global trade tensions impacting the global manufacturing and industrial sectors?
Yeah, well, that's always quite a statement. But what we do see is we are on site with many of our clients in the US, also in the rest of the world, by the way. And we do see a little bit less demand, so I would call them cautious. Of course, the US being a consumer economy, Q4 is going to be important to see what happens there. On a somewhat smaller note, there was a strike at some GM plants that affected our volume also. But yeah, some slight cautiousness in the US. Not yet alarming for us, but yeah, we do need to flag it, of course.
Yeah, I mean, it may not yet be alarming, but as we look to the fourth quarter and the prospect possibly of the trade tensions continuing into the fourth quarter and next year, how are companies in the US actually responding? Do you get the sense that they will be in future pulling back on hiring, or will they continue to support the labour market in the US?
Yeah, that's always the million-dollar question. We always take it as it comes, so we are daily talking to our clients. We are not alarmed on what we're currently seeing. Europe, certainly, Germany is in a far worse state. Quoting the trade wars in US, that's not yet the case. We are still, cautiously optimistic about what happens in the US, which of course has been a very, very long bull run. Not with excessive growth for the last 3 years, but still okay-ish.
Yes. You point to Germany and say that that's actually in a worse state. Is that to do with hiring in the automotive sector?
Yeah, for a long while now. We started seeing it slow down already June last year. And although on the one hand the comparisons are quite easy compared to last year, we still don't see it bouncing back. So this is definitely sluggish out of our total negative growth, 2.5% at a global level. We can directly attribute 50% to automotive slowdown in the broad sense of the word. Even this morning, Tata Steel announced that it's going to lay off people, and that is also due to automotive because they also make auto body parts. So it's a long value chain.
Yes, indeed. What about hiring trends in the UK, Jacques? What sense can you give us about those and how they might shape up for the fourth quarter, particularly as we continue to look at Brexit risks?
In the UK?
Yes, in the UK.
Yeah, well, the interesting about the UK is almost every quarter we talk about Brexit, but we don't see anything particularly negative, of course not positive, in the UK. I think everybody is sort of biding their time. Our UK business is around the zero mark. It's 1% of our gross profit, so it doesn't really keep us awake at night. It's quite a stable, insecure picture.